are you? I hope that everyone is all right, that you've had a good week. So today we're going to be covering the trade review for the week that was from 27th of July till Friday 31st of July. A very interesting week again. Um, and you have to excuse me that there's a little bit of change of a scenery for me in here right now. As you can see, it's not my regular office now, just basically taking advantage of the nice and warm weather. So I'm going to be doing my review from the terrace today. All right, so let's get into it, and let me just get rid of the webcam so we can get full screen. Alrighty. Okay, so review of the main indices. Nasdaq maintained basically its range. We've seen oh, by the way, guys, if it's going to be like a little bit of background noise, we've got gardeners, we've got people in the house, so please apologies for some of the background noise already, but nothing I can do right now. So back to the treble Q, the Nasdaq index. So still in the range of the big candle that we've seen mid-July on, and we maintain basically, like we said, the range that we were expecting, at least for this week, was between 251 261. We managed to go a little bit back above these levels on the dailies, and we ended up the week kind of a weird, like it's kind of like inverted hammer patterned, but still, what can I say? The market is, despite any type of news that we can see between US and China, despite all of COVID-related news, the market's still strong. The market's still, seeing great injections of liquidities. Um, Again, last week we had the voting and we managed to pass this big economic package for European nations, and so generally speaking, we still maintain the market above key support levels, above key moving average supports, and until we're seeing some real curving and signs that this market is going to turn around, at least that we get below these big levels of support, around below like 248, below the moving average 50 on the dailies. I don't think that we can start being really aggressive short, or start being um, on the sideline, investing mostly in cash and stuff like that. So right now there's still plenty of opportunities out there. Let's have a look at quickly at the SPY S&P 500, and we get very much the same type of picture again. Still hanging above moving average 10, 20, 50. Last week we had a bit of like also inverted hammer pattern where the candle was indicating some sign of weakness, but again, you know this week, 27th, 31st of July, we saw you know decent volume and an uptick and a candle, and right now we haven't managed to go past last week candle above 327.23, but I think that we're very close to it, and trying to retest the all-time high on the S&P. And finally, the small cap index of Russell in a range, really not doing much, as like as basically there's 2,000 caps concerned, but again, still above moving averages, and indicating that the market is trending upward. Now on to the trade. So from last week recap and trades that I've had on, I still got position open in AMD and OMI. Close that position on CALX, and we'll review the trade and open new positions in CZR, CCL, BA, and CYTK. And funny enough, this week, although like I just said, the market basically held pretty well the level. I think like at the beginning of the week, we could see some weakness in a few stocks, probably related to new COVID news and stuff like that. But um, most of my positions in during the week were on the short side. Some basically started as being long and then turned out into shorting the same stocks. But and let me tell you that I'm not your typical short seller. I'm not a big short seller, and I'm definitely not the type of guy who will sell into big strength. Like say second, first day red candle, or these sort of like green red moves like some of those guys out there are doing it. They're really specialists and very good at it. It's not my style. I'm mostly I consider myself mostly a trend follower, and that's what I do best. That's what fits my personality best. And even when I'm gonna go out there and put in on the short, I need to see the certain trend convergence going on my chart. I need to see some certain chart patterns in it in order to basically get on the short side of things. So, shorting these stocks that are having like 150, 200% opening gap up, or even on the first day or the second day, it's not really what I do. Maybe one day I will turn to that. And I'm sure there's plenty of opportunities, but I'm not your guy for that. And yeah, let's look at some of the stock. So AMD. So from last week, like I said, AMD came in around 59.50 on the break that we'd seen on the 22nd of July, and managed to basically take on the pre-market some stocks out around 63 and a half. That was on Friday 24th. Now the position was left open. I had basically closed some to have the position in total just before the earning was coming out. And I've been carrying basically the position since then, using a moving average 10 trading stop on on my dailies. And as you can see, right now, let's just make it a little bit. So right now, my stop is still quite far, but the thing is, like with stocks like AMD, even though we've had like a fantastic run up so far from the consolidation area till where we are about like 50%, you don't know where the market can carry us. It might basically be slight, dropping slightly down, consolidating, and then taking some breath and jumping up towards the next big level, which might be $100. I really don't know. So right now, I know that my trading stop is going to be around the $69 area. I've had an entry around the $59, so I'm happy. I've already basically taken money off the table, well into the money on my trading stop, and I'll see what the market basically tells me. The market will tell me what to do next. That's the idea. Um, Other stocks from last week, which KLX. So this one, I was following a moving average stop, a trailing stop, based on the 60-minute moving average 20, which was here, and I was taken out on that candle. What level? Just check on my blotter. There was $19.80. Obviously, I missed the pullback to moving average 50, and then going back to the whole recent high. But we'll see what happens next. I'll probably keep keep it in the corner of my eye and follow that. But that was generally a good trade on that one. So all out on the CALX. And what else? What else? What else? What else? OMI. Same story on OMI. Took the first position on an OPR breakout, 5 minutes. I was on 21st of July. Like, we covered that like in last week's recap, but I've managed to basically take quite a few partials on that. And the last partial, I'm gonna let the market let me know where we are. I was also following a moving average uh, 20 on the 60-minute chart, and on the past few days, we've been like kind of like uh, right below my trailing stop. But I will be waiting that, if we can establish a break below this small level of support here around the 1560 area, then I'll take my remaining position out, and that will be it. Now onto some of the trades that I took um, this week. So I tried to take a long position on Medicinova MNOV, and this one uh, didn't work out quite well for me. The idea was basically that we've had. Let me just basically go back to the daily chart on that. We had a massive day on Monday, and with loads of volume, and then the market reopened with a huge gap down on Tuesday. But I was interested basically that I thought that we could find some decent level of support around the breakout area, around basically all this around this area between 750, $8, around that. So started basically with a small position in the pre-market on Tuesday, which again, went against what I usually do because I don't really trade pre-market. I don't really go. I'd rather basically wait official session, the opening close, the opening bell, and see the first 15 minutes. That's usually what I do. I usually basically wait and be patient, and that sometimes I would miss opportunities, especially for these guys. I try to trade the first minute on big gapping stocks, but again, not my style really. So the fact of being patient and waiting, at least an OPR breakout, either 5 or 15 minutes, has helped me a lot in the past. This time I went against what I usually do, and if we look at the 60 minutes and the 15 minutes bar chart, that's where I came in. So on average, basically, I took some positions here and here. Just go on the 15 minutes and show you. Um, on average, basically, I build up like in pre-market and after pre-market position around like $8 on average. Um, Took everything out with a 60 cent stop loss here, which in the end anyway was good. And again, it shows you to the extent that we have to honor our stop loss because you never know how low the stock can go, and it's closed when on Friday. No, sorry, on Friday official close around 622. So that was not this trade didn't work out too well for me. Again, it shows you that you have certain rules and you have to stick to these rules. This is your system, this is your rules, and try not to basically go and buy and not follow these rules, because usually that's why makes your system, that's what makes you strong as a trader. You have the system, the guidelines of rule that you follow, and that will basically help you to be consistent in your trading. I traded pre-market Not exactly sure why, but if I'd basically kept to my regular trading, I would have seen that on the first 15 minutes, we never basically opened. We never had a opening price range breakout, neither on the 15 minutes, neither on 5 minutes. I would have maybe taken, a punt around these levels, around 750, and maybe established like a slightly better entry. But still, I would have not made money on that thing. I would have probably got stopped out. Uh, but the fact that my entry levels were not very comfortable was the fact that I kind of like went over my rules. Anyway, this is part of trading. This is part of, losing is part of our trading, and we all know that. Let's start with this one, CZR. So CZR, and let's go back a little bit on the daily. The idea was to play that big breakdown area here below that level of around 34.70, $33, and we had a big day on Monday where and I missed that move on Monday, which was again would have been a much better entry. But I decided to try to get into and play the downside on the Tuesday, and I started basically coming in around that level here, thinking that the market will hold this the level around moving average 10 daily. So I was playing basically a pullback moving average 10 and trying to play the downside from there. But didn't work out. I think I had the FOMO kind of, I saw the market doing what I like it to do with nice conversions on the way down, nice breakdown areas, and usually like a downtrend convergence of all moving average that, I like the move, and I was kind of like eager to come in. Again, kind of bent the rule, and usually I like to better weight moves that are like pulling back to my moving average 50. So came in that level. First level that I got in was just check. Um, what's the level? Around that level, around 30 $30.50, but got stopped out the next day on the morning of Wednesday, and around I think 32 for that. I had about a $2 stop on that one. And on Thursday, when we started basically going back to this area, very close to the big area of resistance, it used to be support that became resistance now between 34.70, 35.60, very close with the conversions of the moving average 50 on the 60 minutes bar chart. That's when I started basically building my second attempt to go short on that stock. So shorted around that level, that level, that level. On average, shorted basically around $33.40. That was my average price on these ones. I just go back to, if I see the 15 minutes maybe. So these are the 15 minutes that the picture in the 15 minutes. See, very close to this big area of resistance, close to moving average 200, which is a make or break type of trend changer, on certainly for every unit of time, but 15 minutes as well. So build position here and here, and then on the break of moving average 50 on the 15 minutes, and my average was again around $33.40. Put a stop just around that level, above that level, that first level of resistance of 35 and a quarter, and took a first partial here at $31.60. Put the stop at break even, and basically now I've got my position at break even around 33 and 40, 33 and 40 cents, and we'll see how it's going to go this week. The other stock also that attracting my attention was CCL Carnival. So, like I said, let me just go back here and show you what happened. Same camera basically play that that I like with Caesars. Caesar will basically we've had like again a huge bounce from this cruise liner stock. Most of the cruise liner stops from the you know beginning of end of March, beginning of April. And since then, they've been like really grinding down on the way down, still below moving average 50. Then we start having nice conversions of moving average 10, 20 below the 50 down. And for the first time, on that day, we had on Monday, we also not a huge volume, but it's still average volume, but breaking down those levels. 1 month low breakdown, and that's what attracted my attention. So I turned to the 60 minutes chart, and the idea was to really try to get short close to moving average 50 and close to this area of breakdown. So this is why I started basically shorting, and level was like $14.30. My stop was kind of established dollar above stop loss around 15 and 30 $15.30, and nothing happened. I mean, that wasn't on Tuesday that I basically went short that stock. Same day where I went short also CZR, the first attempt of being short. Um, and I've just basically covered some stocks at $13.45 on the pre-market session on Monday. So stop is at break even now, $14.30, and we'll see if we can get a continuation pattern of the move down on this one. I mean, on the dailies, again, right now, next levels will be the next level that I will be working on CCL will be around that level, around $11. That's where I see the next big support, and I will keep a trailing stop as well to in case the market starts really jumping back up for XYZ reason. Then one stock that I traded was CYTK as well. The idea again on CYTK, let me just basically go back to this. This stock has been trading with good momentum all this year, and I was interested in basically this area. So let's look at I'm just going to go back to the daily and 60 minutes. Okay, so this was the area that I was interested in. We were basically trading back down to this big area of support around $22.60. Also very close to moving average 50, which is usually also an area where I like to play pullback. And so I basically started a small position at that level at around $23. You can see it on the hourly chart. I liked also the fact that on the hourly at around that level of support, we had also a nice oversold oscillators. So position started working in my favor slightly. I was like 30 cents something on the in the money, but I had a $1 stop loss on this thing originally, like just below $22, which was like the area where I felt I would get enough flexibility from the noise of the market. But seeing the market action on that day, on Friday, I immediately jumped out of the position just below 22.50. I think like 22 and 45, $22.45. I stopped out, so for a about 50 cents loss, as opposed to the $1 stop loss that I had originally. And it's like the opposite type of signal that you get. You try an idea where you try to play the pullback. It seems to make logical, but then you start seeing some volume coming back and a breakdown below big levels of support. And at that stage, I thought, you know what? I want to try the other way around. The long position didn't work out. The pullback didn't work out. I'm going to try a small short position on that stock now. So at the same time, basically, I exited the first long position, one short, around 22 and 45 cents. My stop was just above that level, 23 and 40 cents. Um, and yeah, as a matter of fact, I think even less than that. I think I was working on 80 cent stops, just around that level. Yeah, 23 $23.30 and short at 22, just below 22.50. So 80 cent stops. Took a first partial on that candle and now working my stop loss at break even at $22.45. And right now, my next level that I'll be working, my next partial profit will be just above that level of support, $19.40. That's where I'll be working my next partial profit target. And we'll see. We'll see again. So as you can see, a lot of even the position I try to play on the long side turned out to basically be better and more profitable for me on the short side. So again, it shows you that don't be stubborn. If you had an idea, you try to basically work out your theme, your strategy. It didn't work out, but again, if it makes sense to go and reverse the position, go the other way around because it makes more sense, because what the market is telling you to do at that time, then that's what you should do. Don't get stubborn. A lot of people, they will just basically keep on adding on long position because the market keeps on going lower and lower and lower, and they just basically average down. This is the way to the poorhouse. Like many of you already know that. And the last trade that I wanted to talk to you about was BA, Boeing. Again, another short trade. We had numbers in Boeing that were also quite disappointing this week. So, this caused the stock to trade below this big area of support that we've seen, and after this big long consolidation that we've seen since the beginning of June. And I was the first that we had like a decent day with more than average volume breaking down. So I decided basically to, on the next day, to go short. I played an opening price range breakdown of the 15 minutes chart, and let's have a look at the. So that was the day on the 30th, on Thursday, that I started basically playing down the move. One short, $161.30. Had a stop. The original stop was quite wild. It was like just below $168. Um, Probably. Let me just check if I can see. Yeah, just basically just above that level here. That was my original stop. But then the market basically established a good consolidation area, and when the market opened on Friday and started basically trading down, I kind of moved my stop to just above like $163.70, which basically enabled me to take a partial profit at that level, where I covered at $57.80, just below basically $158. And now I'm working a my stop at break even. So working my stop right now at $161.30, and and we shall see as well. They will let the market tell us. Next level that I'll be working as a partial profit target will be $143. So that's it, guys. For me, that's these are that wraps up this trade review weekly recap. And generally speaking, we'll see. That's the month of August. August is known to be kind of like be a choppy month, but this year I think will be probably different in the sense that not a lot of people uh, have been organizing the vacations the way that they usually do for August. I can even see myself being based in a very touristic country with we're seeing a lot less tourists around, and all the major destinations are apart from the very popular one, probably like Mykonos and Santorini. They're still busy, but not as busy as they used to be the other years. So maybe it might be the fact that people have decided to not take as much holidays this year, or maybe not take any holidays because it's difficult to travel because we're afraid of traveling, and maybe that's why we'll see, and because there's still these massive injections of liquidity in the markets, and we still loads of opportunities, momentum plays on the short side and long side. I think it might basically get and engage people to stay in front of the screens. We've got this whole new generations of brand new traders that have been led by like Dave Portnoy and the likes, and people that have been just very new in the market and they've been making money in the market because again the momentum is such that it's difficult even to not make money in this market if you go long. um, but the difference that we'll see very soon between the people that know what to do and not what to do is in the risk management, in how people will act when the market start turning around, because it will be happening at some stage, and when it does, it can do that with a vengeance, and that's when it separates the people that have the discipline, that have a system, that have a set of rules that they follow, and especially to control their risk, to control their position, etc. So that will be it for me, guys. So really, thank you. I want to thank you a lot. It's really a pleasure for me to have you guys around and watching these videos. I hope they're instructive. And if you like these videos, I know that I'm going to try to make them a little bit shorter. And I know I'm dragging sometime, but I'll try my best, as I promise. And if in the meantime, you want to be alerted every time that we've got this new video that comes out in the week, just basically press on the little subscribe button. It will be, and you'll get to know immediately when we post a new video. All right. So take care. Have a safe trading week, and hope to see you very soon on our channel. Bye.